Welcome to the Deep Dive. We're here to break down complex topics into insights you can actually use. And today, we're tackling something absolutely fundamental to, well, pretty much everything we buy and use. Commercial trucking. You know, these trucks, the drivers, they're the ones moving goods, keeping the economy ticking. But behind the scenes,
Yeah.
it's tough. There's some major financial hurdles.
Oh, absolutely. It's a vital industry, no question. But people often forget the sheer cost involved. Buying the truck itself, maintenance, fuel, it all adds up. And running that kind of business requires constant cash flow, serious cash flow.
Exactly. And for the longest time, getting that cash through traditional means was, well, it was broken, wasn't it?
It really was. Super slow processes, tons of paperwork. Banks often just didn't get the specific needs of trucking, especially for the smaller guys, the independent operators. They were often seen as too risky.
Right. So you're waiting weeks, maybe months for a loan approval. That just doesn't work when you need fuel today or a tire blows out tomorrow. It's like trying to fill a big rig's tank with pocket change.
Yeah.
Just inadequate.
Completely inadequate. The old system just wasn't built for the speed and the reality of the trucking world.
Okay, so fast forward to 2025. Things are changing, right? There's this wave of new, faster, smarter ways to get money driven by technology. That's our mission for this deep dive. Figuring out how tech, specifically Fintech, is transforming how truckers get funded. Making it quicker, easier. We'll unpack what Fintech actually is and then look at 5 specific ways it's helping truckers keep those wheels rolling.
Right.
So let's start there. Fintech. It sounds kind of jargony. What are we really talking about?
Yeah, it sounds fancy, but the core idea is pretty simple. It's just finance and technology working together. Think using apps on your phone, smart algorithms, data analysis, all to make financial services like getting a loan faster, easier, and, well, often better tailored.
Okay, so money plus tech. Why is that such a big deal specifically for truckers? What makes them love it?
Speed is a huge one. Instead of piles of paper, you can often apply right from your phone or computer. Minutes, literally.
Minutes, wow.
And you get answers fast. We're talking hours sometimes, not weeks or months. That's crucial when you have immediate needs, fuel, tolls, urgent repairs.
And it's not just faster. You mentioned tailoring.
Exactly. Fintech lenders often look beyond just a simple credit score. They might analyze how your trucking business actually works your routes, your on-time record, things like that. So the offers are more customized. And often the repayment plans are more flexible too. Maybe they adjust based on how much you earned that month.
Okay, that makes sense. Less strain if you have a slow period.
Precisely. It avoids that fixed payment pressure that can really hurt during downturns.
All right, so we get the what of Fintech, faster, smarter, more flexible money. Let's get into the how. You mentioned 5 key ways this is helping truckers in 2025. What's the first one?
First up is something called equipment leasing. You might know it better as rent-to-own for trucks.
Okay, rent-to-own. How does that work in trucking?
Well, instead of needing a massive down payment to buy a truck outright, which, as we said, is a huge cost, you pay a regular fee, maybe weekly or monthly, to use the truck. And after you've made enough payments over the lease term, you usually have the option to actually buy the truck and own it.
Ah, so it saves that big upfront cash hit.
Exactly. That's the key benefit. It frees up your working capital for fuel, drivers, insurance, all those immediate operational costs.
And I guess it gives you flexibility too, like maybe upgrading easier.
Definitely. At the end of the lease, you can often choose to get into a newer, maybe more fuel-efficient truck, which helps keep you competitive. Plus, some of these leases now even bundle in smart tools, like telematics, that can help track maintenance needs or efficiency. It's getting pretty integrated.
Interesting. Okay, that's leasing. What's number 2?
Number 2 tackles a really common pain point: getting paid. It's called invoice factoring.
Invoice factoring, right. So this deals with customers taking a long time to pay their bills.
Precisely. You know, a trucker delivers a load, sends the invoice, but might have to wait 30, 60, sometimes even 90 days to actually get paid by the customer.
That's a long time to wait for cash you've already earned.
It's crippling for cash flow. So with invoice factoring, the trucking company essentially sells that unpaid invoice to a third-party company, the factor. The factor gives the trucker most of the invoice value, say 90 or 95%, almost immediately, often within 24 hours.
Wow, okay.
Then the factoring company collects the full amount from the original customer when the payment is due. The difference, that small percentage, is basically their fee for providing the immediate cash.
So you trade a small fee for getting your money right away.
Exactly. It eliminates that long waiting game. Suddenly you have cash for fuel, for payroll, for repairs, right when you need it. No more waiting.
And I hear this is often done through apps now, too. Makes it easy.
Yeah, very often. Smartphone apps make submitting invoices and getting funded incredibly quick and straightforward. It's a massive improvement.
Okay, that's huge for consistent cash flow.
Yeah.
What's our third strategy?
The third one is revenue-based financing. This one's quite interesting in how it handles repayment.
Revenue base.
Oh.
How does that work?
So a company lends you money, maybe for growth or an emergency, but instead of fixed monthly loan payments, you pay back a small, agreed-upon percentage of your monthly revenue.
Oh, so the payment amount changes.
Correct. If you have a great month and earn a lot, your payment is higher. If you have a slow month, your payment automatically goes down.
That sounds much fairer, especially in a business like trucking where income can fluctuate.
It is. It aligns the repayment directly with your ability to pay. It means you're less likely to get stuck with a payment you can't afford during a downturn. It makes it really good for funding things like taking on a new contract or covering an unexpected large repair without taking on rigid debt.
Provides a bit of a safety net then. Okay, number 4.
Number 4 taps into the crowd. Peer-to-peer lending or P2P.
Right, like crowdfunding, but for loans.
Essentially, yes. Instead of going to one big bank, you use an online platform that connects you with lots of individual investors. Each investor might put in a small amount, and together they fund your loan maybe for buying a truck or a major overhaul. Then you pay it back, usually with interest, through the platform.
Why would a trucker choose this over, say, a bank or another fintech lender?
Well, sometimes you can get better interest rates because you're cutting out the bank overhead. And it diversifies your funding source. You're not relying on just one institution saying yes or no. It's like having many small backers instead of one big one.
Interesting. A different kind of support network almost. Okay, and the 5th one.
Our 5th one is where fintech gets really data savvy. Specialized fintech fleet loans.
Fleet loans. So for companies with multiple trucks, or does it apply more broadly?
It can apply broadly, but the key thing is how they decide to lend you money. These fintech lenders go way beyond just your credit score. They plug into your trucking operations data, things like your driving safety records, how often you deliver on time, your fuel efficiency, even customer reviews sometimes.
So they're looking at how well you actually run your business.
Exactly. They build a much richer picture of your performance and your actual risk level. And because they have this deeper understanding, they can often offer better loan terms, even if your traditional credit history isn't perfect. If you run a tight ship operationally, it can really pay off here.
So your good work on the road translates directly into better financing options.
That's the idea. It's a loan designed for truckers based on trucking metrics. And like other fintech options, the application and approval process is usually super fast, think hours, not weeks.
Okay, 5 really distinct approaches there. Leasing, factoring, revenue-based, P2P, and these data-driven fintech loans. Now, these aren't just abstract ideas, right? There are actual companies and apps doing this stuff.
Oh, definitely. You see platforms emerging that specialize. For instance, you mentioned TruckFi. They're known for using that driving data to get better loan terms. Then there's RouteFund, focusing specifically on that rapid payment after delivery, the factoring model, basically.
Right.
You've also got companies like GearUp Capital really streamlining the whole truck leasing or buying process, making it much quicker.
Okay.
And even things like FuelFlex, offering working capital that's tied directly to how much fuel you're using. So the financing scales with your activity level. It's getting very specialized.
It sounds incredibly targeted. And are truckers actually seeing the difference? We have some quotes, right?
We do, and they really highlight the impact. There's James B. from Texas who said something like, "I applied on my phone while I was getting gas and got approved before I even finished my coffee."
Wow, that's fast.
Right. And Samantha T. from Ohio mentioned, "RouteFund gave me cash the same day I made a delivery. No more waiting a whole month."
That just says it all, doesn't it? It cuts through all that old friction.
It really does. It's changing the day-to-day reality for these business owners. That time saved, that cash flow certainty, it's huge.
So with all these options, leasing, factoring, revenue-based, P2P, specialized loans, how does a trucker or a fleet owner choose the right path? It sounds like a lot to navigate.
It is, and that's why you need to ask some key questions about your own business. First off, what's the goal? Are you trying to acquire trucks or just manage day-to-day cash? So buy versus rent is a big one.
Okay, ownership versus access.
Right. Then think about your cash needs. Is it a constant thing, needing steady flow, or more like a one-off injection for a specific purpose, like expansion?
Right, ongoing versus project-based.
Also, look at your customers. Are they reliably slow payers? If so, invoice factoring might be a really good fit.
Makes sense. Address the specific bottleneck.
And finally, how fast do you need the money? Is it an emergency, need it yesterday situation, or can you wait a little bit? Different options have different speeds.
So it's about matching the tool to your specific situation, your business model, your cash flow patterns, your goals.
Exactly. There isn't one best answer for everyone. The great thing now is that there are choices. The goal is to really understand your needs and pick the smartest fit from this growing menu of options.
Okay, so wrapping this up, the big picture here seems to be that success in trucking in 2025 isn't just about driving well or managing logistics.
No, not anymore. It's also fundamentally about using smart money, leveraging these new financial tools to keep the business engine running smoothly.
And the good news is, Fintech has made getting that smart money much more achievable. Whether you're a solo operator or running a larger fleet, the old roadblocks are coming down.
It really empowers truckers to work smarter, not just harder. Exploring these options isn't just about solving today's cash crunch. It's about setting the business up for resilience and growth in the future. Being able to react quickly, grab opportunities. That's what this access to capital enables.
So as we finish, here's something to chew on. We've seen how fintech is radically reshaping finance for truckers using data and specific industry knowledge. How might this trend, these super specialized, data-driven financial solutions, start shaking up traditional banking across other industries too? What other old ways of financing might be next in line for a major tech-driven overhaul? Something to think about. Thanks for joining us on The Deep Dive.